Hello traders, how are you doing? I really did miss you guys. Today is 12th of 12th of October. Uh, what was actually the time? This is 8:50, exactly 8:50, 12th of October. I want to do this video for you. You're welcome on today's bro. Today, you're going to look at the charts. I've missed you guys. I've been very, very, very busy with other things. Hey, I'm a swing trader, so I don't have to be on the chart every time looking at trades that doesn't exist. Am I saying that day traders don't make money or haven't they have not been they have not always been making money? They have. But that is what they are. That is who they are. Me, I know who I am. I'm a swing trader. Our opportunity comes at least once in a week. But when we catch it, we'll make nothing less than 200 pips. Those are the kind of trade I'm looking at for. I can't sit on my chart, keep looking at trade that does not exist. So guys, I missed you guys. I'm back. We are back full time this week. We are going to be on the trading floor. Something really happened to our account that we were managing. MFF kicked our account, some of our accounts they shut down, and we lost some of our accounts that we have been trading. That's been very, 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 very bad. So we are trying to start up a new firm and set up to manage a series of new accounts. It's what it is, guys. Sometimes shit happens in business, but life has to go on. So, guys, I will be looking at the chart today. Just few pairs I will be looking at. We're going to look at few pairs. What are those pairs that are trending? Okay, we're going to look at pairs that are trending. Not basically we will look at JPY pairs because JPY pairs are the actual pairs that are really moving right now. They are the pairs that are behaving very well. I told you that market ranges 60% of our time and trends 40% of our time. So most times you will catch a pair ranging, and those are the times that you shouldn't be trading those pairs. Trade only pairs that are trending. So wait for the pullback and smash the pairs. Those kind of trades are trades that are very easy and doesn't make you crack your brain, start thinking, is it gonna go up? Is it gonna go down? Is it gonna go here? Is it gonna go there? No, that is not what you are looking at. You're looking at pairs that's gonna trend, that is very easy for you. Hey, I have a whole lot on my head. I can't be cracking my head again for something, trying to decipher if a trade is actually going to move or not. So, guys, today, Trader Talk episode 4, we're going to grant the chart. We're just going to look at few pairs this week. We'll look at what the pairs have done and where it is, what we should be looking at trading those pairs this week. So, it's always good to draw your trading plan. If market do like this, I'm going to react like this. Market do like this, I'm going to react like this. And it's better. I always encourage you to do it during when the market is static. The reason is because when the market is moving, you have to you tend to act irrational. You tend to start looking at let me let me it's moving up, it's moving up, it's moving down. It's changing. Oh, it's on the it's I think the market is on the zone. Let's say that mindset of want to trade would be there. And because of some nasty, irrational behavior the market makes sometimes, moving up and down and all of that, you want to trade, you will be distracted in your analysis. So it's better you do your analysis during the weekend when the market is quiet, when the market has closed down for the week. You are fresh, you are calm, you try to analyze all the pairs from the beginning of the pair that you have down to the end. All the pairs you have, you analyze the charts. You're there. So guys, without wasting much of your time, I will be sharing my screen with you guys. So guys, please, you know what they do, you know how the drill goes. Keep liking, subscribe, and share. I know I've not been doing very fine by giving you tips on what you should be trading, doing analysis on the pairs market you should be trading. But however, that shouldn't stop you from doing what? Sharing and liking and subscribing. Because hey guys, I told you I always got your back. I'm not gonna leave you. We are in this together and we're gonna make it together. So I want to share my screen right now. Done. You are welcome inside of my screen. This is Living on Forex Live and Direct. Please keep liking, share, and subscribe to this channel because we'll always drop you hits. The kind of trade we call out here are not trade that you see anywhere 10 50 pips, 30 pips. Those are not the kind of trade we call 100 pips. The trade we call out for you here are trade that once you are able to catch them, it changes your account, it transforms your account. Those are the kind of trade we'll give you. Trade from 200 pips and above. Those are the kind of trades we'll give to you. So this week I'll be doing analysis on trade pairs basically. And these are JPY pairs, Euro JPY, GBP JPY, and USD JPY. Why did I choose the JPY pairs? The reason is because the JPY pairs are the pairs that are currently moving right now. You want to trade pairs that are trending. Don't go and trade trading pair. Ranging pair rather. Ranging pair will blow your account. I always say this. In the world is enough for the wise. So guys, you are welcome inside my stream. The pair you're looking at currently is Euro USD. Now, Euro USD, I will just talk about this Euro USD a little bit before we move on to the floor analysis for the three pairs I just mentioned that we're going to do analysis. We're also going to talk about gold too. We're going to do analysis on gold because gold is also trending. It's something that makes everybody is trading right now. Gold, 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 gold. So guys, now Euro USD. Now, guys, I told you, when the US dollar was very weak, gold was moving boom. You know, when US dollar is weak, gold will be massively moving up, all the way up in the chart. So when gold is moving, guys, it shows that the US dollar is weak. Gold is moving up, showing that US dollar is weak. Now, because US dollar was weak, we should be expecting Euro USD to move up. But guys, I told you guys, and I always tell you, I've been telling you ever since this structure form. This is over going to 6 months now. But I told you that as far as we are below this trend and this market gives us this, let me use weekly charts so that you'll be able to see it clearly. As far as the market gives us this head and shoulder, I've not cancelled it, I've not cleaned it because the market is still validated, the structure is still validated. The market has not devalidated the structure. I told you when the market gives you head and shoulder structure on a weekly time frame, guys, it's not something you neglect. And for how long, for God knows how long that I've been preaching about this structure, head and shoulder. All this while the USD pair was weak because the market was going up as if it's going to devalidate the structure. But the market came above this shoulder zone and then it broke a little bit. That is what they call fake out, and it came back aggressively, and the market is coming down. So the market has not devalidated Euro USD. So Euro USD has been on a range for the past 1 year, going to 2 years now. The range started, let's measure, let's calculate. The range started, okay, the range started 2023 January. The market has been moving ever since, and this is 2024 October. The market is still in this range between this zone and this zone. That is where the market has been moving for over a year plus, going to 2 years now. Okay, over a year and 6 months, 8 months and thereabouts, the market Euro USD has been ranging. Now, guys, it's as if it's steaming, shaking. Very soon it's going to explode. And when Euro USD explode, guys, it's going to be something everybody will be trading. It's going to be something that will be giving people money because anytime you pay a range for it, that long period of time, the breakout is going to be so fast and so aggressive and so profitable that it will the breakout is going to commensurate with the ranging zone. So the market has ranged within this zone and this zone. So if you calculate this zone and this zone, is over 500 pips, there about 500 pips. Euro USD has been ranging within 500 pip range. When it's going to blow out, expect the breakout to be 500 pips down. So if you're able to catch this move, from the beginning, you are sure to have 500 pips trade, profitable trade, and that is going to transform your account. Imagine you are using standard lot size, guys, for a size 500 pips movement. That is massive. That's going to be close to $5,000. Yes, I think thereabout. Yes, that's close to be 500. That's $500 in just one trade with a standard lot size. Just one standard lot size in that trade, you're going to make $5K assured full time in just one trade without doing much, without stressing yourself. You just relax and the market will work for you. That is the kind of trader I am. I don't have time to be looking at the screen because I've discovered the kind of person I am. If I sit on the screen, I tend to take irrational decisions and make careless trades and make some losses. So it's always good to be patient, to wait for your confluences to come. And as a swing trader, once you have that right trade, that one trade alone is going to cover any losses you have, and it's going to even put you in profit, more profit than the day trader who has been taking trade every day, unless that trader has been having series of wins within that period of time. So guys, without much ado, so Euro USD, since Euro USD still has not devalidated this head and shoulder structure, guys, the structure is still holding. And I'm telling you, I always tell you, and I've been telling you over 6 months plus now, I've been telling you that Euro USD will break out. And when it's going to break out, is it going to break out on the downside or is it going to break out on the upside? Some people will say upside, some people will say downside. But I'm telling you that mark it here, tag this video, keep it, save it. When Euro USD break, we'll come back and check and see what I said, if it's going to be true or not. I'm telling you for sure that Euro USD, I'm 98.5% that Euro USD is going to break to the downside, not the upside. I repeat, Euro USD is ranging, but it will soon break out of the ranging zone. And when it's where it's going to, the direction it's going to break through is the downside, not the upside. It's going to break the downside, not the upside. So keep this video. We're going to reference it. I'm going to tell you that watch Trader Talk episode 4 when I mention this, when it will happen. So we're waiting for this market now. If Euro USD come down to this point and breaks this zone, it has officially breaking out of the range. Then we are expecting this move from this point that you see this stroke I put here, from this point down to this zone, at least before any reversal is going to happen. Before any reversal will happen, the trade will move to this point. And from here to where I just marked now is 600 pips. 600 pips, guys. From here to here is 600 pips. So, guys, if you're able to grab this trade, 600 pips, hold it very close. That is $6,000 for those of you who are using standard lot size. Mini lot size, guys, you have $600 in just a trade. This is the type of trade that even if you have small money in your account, maybe you have like $50, you just want to trade that trade alone. $50, you just use mini lot size in that trade. Depending on the broker you use and depending on your leverage, you use mini lot size. At the close of this trade, you're going to be seeing something close to $1,000 in just that your $100 account or $50 account. For those of you who are trading small money, so just be patient. Wait for this trade to cook. It's cooking now. It's shaking. It's shaking. It's shaking. It's cooking. When it's going to blow, it's going to blow. So guys, that is this for Euro USD. So for those of you who are trading junk, looking at buy Euro USD, sell Euro USD, I call you junk traders. You aren't trading any shit. What I've been trading is this nonsense, this small move here from here to here. That's what you have been trading all this while. That is why we swing traders will look on the higher time frame. The higher time frame helps you to understand the dynamics of the market. The higher time frame helps you to understand a pair that is not tradable and a pair that is tradable. For now, Euro USD is not tradable. But from what I'm seeing, look at this move, aggressive move, this double head that is formed in this zone. It seems it has found an anchor over there, and the market is ready to pour. And looking at what is happening in the US economy, the US economy is coming up again. Look at what this head double top here, and the market is breaking. The next place, if it breaks here, the next place is coming here. If it breaks here, the next place is coming in that neckline that we are waiting for it to break. If it finally breaks that neckline, Euro USD has broken out of the ranging zone, and we are expecting a new trend, continuation to the downside. So that is that for Euro USD. So keep eye on this trade. We are waiting for this market to break this zone, this 1.03549 zone. This is where we are waiting for Euro USD to break out. And once it's break out, we know the market is coming here. That is for that. So let's move to the nitty-gritty of the day. Our analysis on Euro JPY. We want to do a fresh analysis on this. So I'm going to clear my chart so that for those of you who do not know how to do analysis, you're going to see how we're going to break this chart within a minute or two. We're going to break this chart and tell you what we should be expecting this market to do. So, okay, I'm supposed to, I think I need to remove all of this so that, okay, network wants to misbehave. Okay, so remove drawing, done. So guys, now let's start. You know how I do my analysis? We go to the higher time frame, we analyze. I'm a top-down analyst. I analyze from the higher time frame to the lower time frame. You take it from the weekly, from the monthly to the weekly to the daily, 4 hours, and then below. That is that. It helps you to see the dynamics, the trend of the market. So if you're looking at this Euro JPY in a monthly time frame, the market is up. Then one sweet thing about trend line, it helps you to know if the market is still up or the market is changing trend. So once the market breaks a trend, it has broken the trend, then the market is reversing. So if we take Euro GC and take all of this region, see, that has been the trend. So then we come to weekly time frame, we are going to get our zone. So what we are seeing here is that the market this trend is forming, the market has broken it and retested it. So we are expecting Euro, without even going down to the lower time frame, I know that Euro JPY will fall. Come this week, highest is going to do a little touch on this trend, it's going to drop. So first, let's come to a weekly time frame, and then we'll look for our zones, our important zones. So I see an important zone here. Okay, I see an important zone here. So usually I use green for my weekly time frame. Wow, that is zone 1. Okay, I look at those important zones where we have activity, aggressive moves. So I think we can take here, because this is the all-time high. So it's a point that you have to notice, you have to focus. The all-time high is always a point you have to focus. That place the market got and reversed is a point. So we've gotten the 2 major zones from the weekly time frame. Let's go down to the daily time frame and see some intermediate trend. So I'm seeing here as a zone as well in the daily time frame. So I'm going to use blue for the daily time frame zone. Blue. Let's change this to blue. Okay, nice. Guys, you are seeing what is happening. The market is exactly on that zone. The market is exactly on that zone. So we are watching the market. I'm not going to take any sell right yet. I'm waiting for an aggressive move here and a rejection back to this environment. Then I know the market has gone back and tested. You know, before market moves, it goes to test liquidity. So we are expecting the market to come here, test some liquidity, and then the market should drop. Then once it tests liquidity and gives me a pin bar, a rejection candle back to this environment, and that might also form a engulfing bar in a lower time frame, then I know it has done what it wants, what it wants to do in this environment. Then I'll be looking at my sales, and then this trade is a very nice potential trade that's going to give you nothing less than 500 pips. Remember, this is Euro JPY, so it's a very liquid pair. The pips counts are high. So if you take here to this region, at least not getting to this touch, just stop it here to be on the safer side. That's going to give us 704 pips, guys. These are the kind of trade that I'm waiting for, and I'm going to be patient. Guys, be patient. Be patient with this thing, guys. You be patient. See, if you understand forex, you just understand what works for you. Follow your rule and be patient. Wait for that thing to happen. Once it happens, your account will thank you for being patient. Imagine somebody who is trading every day, 5 days in a week. Next week, it takes 5 days, and you have not seen your confidence, your trade has not set up. You are relaxing. The person has traded for 3 weeks. So what result does he have to show for it? He has some wins and losses. And after counterbalancing, the profit are not really much. But you who who wait patiently, and maybe a week or 2 weeks, that this entry, you now this trade now forms, and you now take this trade. At the close of this trade, your return of investment is going to be way higher than that person that has been taking trades here and there, a lot of activity. Just this trade, you can even take multiple positions as much as you want, because you know the market has given you a clear direction, a clear course where it wants to go. You're taking that, hitting that trigger, you can take 3 positions, 4 positions according to your account size, and then allow the trade to run. Once this trade close and take you out in a TP, you are done for that month. Next month, you look for trade like this. Once trade in a month alone is capable of giving you what you want. Guys, you don't have to be on the screen every day looking for trade. I'm a forex trader. I'm a forex trader. So you have to be on the screen every day. Some people, when I see some traders, they will ask them, what is your target for the day? And some will say, I'm targeting $50. I will just laugh at them. I'm targeting every day. I target 50 pips, $70, $100, this, that. You don't do that as a forex trader, guys. You don't have target for the day. You shouldn't. I will come to that later on. But that is, if I just hear you say that, I know that you are a new trader. Look at professionals. They will not tell you that they have target for the day. Because is your grandfather the owner of the market? So that mentality of target for the day will always want to make you to do what? To come to the chart and look for your daily income. And by coming to the look, that compulsion to trade will drain your account. The market will welcome you, and voila, your account is gone. So, guys, as I'm doing the traders analysis, I'm also giving you some tips. So when you listen carefully to the end of the video, before I finish all the analysis, I'll be dropping tip intermediately. So for those of you who are struggling, who are almost there to get the edge, some things I say here might be just what you need for your trading life for you to fix the puzzle. So guys, these are the type of trade I encourage my people to take. I'm going to wait for this special. So what I do is I see people talk about flipping account. Yes, although I'm not a fan of flipping account, because I know those things don't work. If you want to make it big in forex, if you want to become, you want a forex to be your big business, and you want to cash out big time in this business, flipping account is not the way. You need money, you need capital. That is the truth. You need capital. At least you need to start from $10,000. Or if it's your own personal money, you can start with 5,000. Some can also actually manage $2,500 and grow it small. If you're talking of that, it's reasonable. But you don't come here and think and can come and say that you will use $100 to become a millionaire in forex business. Guys, it's a lie. How many persons have done that? All those things you see on social media, they are scam. They are scam. If you try it, you're going to see that the heartache, the stress alone, is not worth it. You might build it to some point to still go down, because the account is just too small. You cannot even have good risk management with a $200 account. That's the truth. So at least for those of you guys that are silver spoon guy breeded, you have money, you can start with $5K and manage it that way. Then if you cannot afford $5K, start with 2,500. For those who have already gotten their edge, or not for people who are learning or who are trying to come. You hear that I say you start with 2,500 and you put all the money, you blow it. If you are coming new, you want to test, you are learning and you are switching, you want to test, put small money. So that if you lose it, because it's the higher possibility that you're going to blow those accounts is there. You are going to lose them. So if you lose them, don't cry, because it's small money. But when you have gotten your edge, you actually need money. You should be thinking of thousands of dollars, not hundreds of dollars, guys. So that's that. So this is the trade. I'm patiently waiting for this market to do this aggressive touch to this side and rejection, and then we are going to sell. So Euro JPY is still cooking. It has not yet finished cooking for us to take our trade. So if you come to a lower time frame, that's why lower time frames are deceitful. You see what is happening? This small pin now, some people say, hey, it has touched. This is 1, 2, 3 touch. Market is going to drop. Well, we do not know what the market wants to do. We wait for the market to open. But if you look at the daily time frame, it's a big green candle. But when you look at smaller, like 4 hours time frame, you are seeing a rejection. So you get confused if you are only looking at the smaller time frame. If you go to 1 hour now, you're going to see some entry. See, when somebody says, "Whoa, this is a very nice mother and child," and then you enter, or railroad track, you enter. Because the market did not even do any major move below after that candle formed. It shows that they are still playing around this environment. They might likely come back and test this side, or even go up as well beyond that. Because if you look at the daily time frame, the daily candle is green and it's a bigger green. So it might come, the next candle might come, touch here, reject. So when I see a daily candle coming here and rejecting off of this environment, or a 4 hour candle giving me a serious aggressive move to the up, aggressive move to the down, serious engulfing candle, two big engulfing candles like this, up and down, then I know that the liquidity has been tested, then that will be my trigger. So guys, Euro JPY, we are looking at sell opportunity. The next, I'm not talking about JPP because nothing is happening in that pair. So we are leaving that for the next pair we'll talk about is JPY. So let me clean the chart up. I don't want this video to take that much. That's taking too much time, but I'm going to be as fast as possible. Now, JPY. So we'll go to monthly time frame to see what is going on. If you look at the JPY trade, let's take market from here. Okay. Okay. Okay, so the market is kind of still up. JPY has not broken trend, but we know it's gonna broke. Okay, so that is our trend. Then let's go to okay, so we are looking at zones. Let's take here as our support and resistance environment. Support and resistance. Okay, so now we're gonna the all-time high, very important, because that thing that pushed that market down below, if it gets there, it's likely to push the market down below. So that's the all-time high. Here the rejection started. So, okay. Now this is the daily time frame. Daily time frame. The market did this. Then. So if we draw counter trend, you see that the market has broken the counter trend. Draw a counter trend. This was a counter trend I drew last time. This counter trend here. You see what's happening? The market came down, retested the drop, and then broke it. The market has broken it. So for GBP JPY, guys, GBP JPY, we are not trading it yet because it's not correlating with Euro JPY. Euro JPY has shown that the market has broken for a sell. The market has broken the trend, the bullish trend for a sell. GBP JPY is yet to break the trend. So because of that, we are going to now compare what is happening. It's confusing. Euro JPY has broken the trend. That means that's reversed. GBP JPY has not broken the trend. That means it's still upwards. So what can we do? How do we know the actual trend? We are going to look at other JPY pairs to confirm if if the JPY has the Euro JPY will really continue the downside. Correlation is very important in this case. When you're having uh, conflicting charts like this on a pair, look at other pairs that have that same currency. Look at four other pairs that have that same currency and see what is happening. So if all of them aligns with one, then that one that is odd, something is not connecting. So just leave that pair. Don't trade that pair. Relax. Later on, it's going to continue and join the rest. So if GBP JPY has not come to break the trend to continue to change to show that it has changed the downward trend, we will not be trading it. So Euro JPY broke retest. It's going for a retest before dropping. So let's see what USD JPY is doing so as to now know whether it is bullish or bearish. Now, guys, look at my charts. I will not be drawing a fresh chart on it because we are taking the time, but I will just explain. This chart is the chart I've drawn for a long period of time. Now, look at it was bullish, 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 bullish. The market broke aggressively. It has broken the trend. And what happened? The market broke, and then it's going back. So if you look at the weekly time frame, you're going to see this trend. Now, guys, look at the weekly time frame. Look at the weekly time frame. The market is going back to test this environment. Okay, going back to test this environment. So USD JPY and Euro JPY, they are correlating. They are in tangent. They are together. They are showing us. So that means it's GBP JPY that is the odd one right now because Euro JPY and USD JPY are together. They are behaving alike. That is correlation. So this is how we will be able to select the best pair that we will trade for the week. We know that yes, JPY pair are trending, but among the JPY pair, which ones gives us the best conflict, the best trading opportunity? We will not select. So from our analysis, we've removed GBP JPY from the whole scene. It's no longer something we are looking at. We will not be trading it because it is not correlating with other JPY pairs. So Euro JPY and USD JPY is where we are now focused on. And now I like this the setup I'm seeing in this Euro JPY so very much. Why do I say I like it? Look at what the market did. The market broke aggressively. It's coming back for a retest. Usually the market will come back to test liquidity if it still wants to pull down. Now I've come down to daily time frame. This zone is, you see how I circle there? That is the point of interest. So I call it POI, point of interest. This is my POI. That is why I circle it. So that whenever I see that circle, I know that this circle has a reason for circling it. I know that that is a point of interest. So if you go to a 4-hour time frame, the market is yet to come there. Okay, so let me. So 4-hour time frame, you see how the market is going there. And with the behavior I'm seeing towards that environment, I think the market will test there and drop because the buys are no longer holding strong. The buys are no longer, see those small candles. It shows that the buys are weakening. And then when the market gets there, we'll watch what the market will do. So USD JPY, Euro JPY, it shows that JPY is strong. JPY is riding both of the pairs. Then to extra confirm, let's go to one more JPY pairs and see what is going on. AUD JPY. Now AUD JPY, if you come to the monthly structure, AUD JPY is behaving with the rest of the JPY pairs. Okay, so let me just clean up this stuff so that you'll be able to see what's going on. Now, let's take a trend. In our monthly time frame, this is where the trend started. So we draw it, connect it with this environment, and then boom, we have a trend. We have a trend, guys. So this is our trend. ADJPY is a bullish pair, bullish, 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 bullish. The market came and the market has broken that environment. And then what is happening right now? Let's go to weekly time frame. Okay. This is a better touch. Now, the touch here, this touch here, and then the market has broken. We look at the aggressive candle. This red aggressive candle that engulfed these three candles. It shows a strong selling momentum, strong selling speed. So that should tell you that whenever you see this kind of sales coming in, or this kind of candle coming in, it's showing that the sellers are strong. And look at the behavior that the market was behaving before it gets to that region. You see this small move. It's not really strong. It takes 1, 2, 3, 4 moves to get to where it go, but one candle took out the 4 moves, shows that the sales are strong. Okay. Now the market did that and break the trend. And what we see, it came down to this place and now it's going back. So is it going to break back the trend and continue the upside, or is it going to is it just doing a retest to drop? Well, we wait for that to happen come this week. So if you look at the chart now, you'll see that the market came, tested it, drop, came, tested it. Now it's playing around that environment. And with what we are seeing, the market is not breaking this zone. It's not ready to break this zone. I think it's going to go down because of the behavior of this candlestick in that environment. Look at this one candle aggressively in that region. How many candles did it take to come to this point? But how many candles is it taking to get to that point? A lot of candles, small candles. The behavior of the price action in that region is telling you that it's telling you something about the market. So they can look at the behavior. The buyers are not strong. But the sellers, when they come in, one candle will take out will minus 3 candles, shows that the sellers are taking over. The sellers are taking over gradually. And when they take over, you are going to see an environment, a strong move. So right now, Euro JPY, USD JPY, AUD JPY rather, has tested. So what coming this week, what are we expecting? What I am seeing from that is going to happen this week, JPY pairs are going to be strong this week. And JPY pairs are going to ride all the currencies that they are paired together. That's what I'm seeing. Because what we saw this week that just passed, it seemed the JPY weakened and all the pairs that it was paired we are trading. I think that thing happened because the JPY pairs want to retest the zones they broke. So come this week, that retest will happen and then the trend will continue. That is what I am seeing. So AUD JPY has given us extra confirmation validating what Euro JPY and USD JPY are doing. So guys, come this week, are we trading AUD JPY? AUD JPY is not really my pair, it's not really, but it's there. Sometimes it can give you very good opportunity to trade. But I just kept it there to look at it, to correlate it with other JPY pairs. The 2 pairs I'm looking at trading this week, Euro JPY and USD JPY, those are the clearest and the surest thing, the next big thing. So you see how I'm doing my analysis to select the best pair we should be trading. That is how you should do your analysis. You don't just do analysis because you want to mark draws. As you're doing analysis, it's helping you to see clearly what the market is offering and the best pair that you should be trading, because not all pairs are tradable at a particular time. That is the truth. Not all pairs are tradable. So later on, we'll draw our supply. You know how to draw the support and resistance. Look at where the market has volatility and then draw your support and resistance. So finally, let's go to gold, our big boy. Gold. I've already done analysis on this gold, but let me clean this stuff and just tell you and just explain. I'm not be drawing support and resistance, but I will just be explaining what you should do. So guys, if you look at gold is it's just moving like knife. It's not ready to turn back. So what you should be doing after doing your analysis, wait for a retest and continue to the buy side. Is buying. Don't look at selling opportunity and go. Just look at buying opportunities, buying. So allow the market to come back. The only way, the best way I can explain to you trading gold right now is wait for a pullback and smash to the upside. Wait for a pullback in a support and resistance support levels important major support levels, major demand levels. Those are the places you are watching your pullbacks. Observe how the market behaves in that environment. Those are where you should be looking at your buys, your buys, your buys. So if I take this side now, this place I see this rejection, I take it here. So if the market comes here, say, just like that, look at those zones and then make your buys. So guys, this video has taken too much time. I've done a lot of talking because it's been a while I do a video for you. So I just want to pour out my heart to you guys, so that you will know what you should be trading. So guys, I want to unshare my screen right now with you guys. I want to unshare my screen. Fine. You are out of my screen right now. So let me just talk to you guys. Those of you who are struggling in this business, I got your back. Please keep watching this video. If you're a forex trader, you want to become good, don't be myopic in your thinking, or don't think that you know it all. Explore. Look at what others are doing. At least you might learn one or two and add to what you know. That's the game for you. In this business, nobody knows it all. And nobody has 100% strategy. There is no 100% strategy anywhere, guys. Everybody make losses, but the ability for you to minimize your losses and maximize your profit, that is what makes you a profitable trader. Okay? So you should always be knowing what you should be trading. First of all, know what you should be trading, how you should be trading it, and all of that. So guys, thank you very much for staying true to this video. Thank you very much for watching. Thank you for even for subscribing. And please keep sharing this video. Please share it to all the forex traders you know. Let them watch. Let them learn. Let them learn. And if you want to learn how to draw support and resistance, I've already made a video about that in my channel. Search my channel, you'll see the video I say how to draw true support and resistance. You'll see, watch them. You understand how to draw support and resistance. That is why market always react in my zones. In fact, most times when I lose my trade, are trades that I take, that I hastily take. But any trade I take in my zone ends up all being a winner. So I learned that patience was my problem. So I worked on patience. Right now, I got nothing in me. Like I'm not longer excited in the forex business. It's only excitement that causes you to think, because you're a trader, you want to make money, you want to show off what you have made. No, 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 no. I see the market. If the market does not give me, and I'm not convinced with what I'm seeing, I drop my trade. Even if I do not see an entry that week, no problem. No problem. My money is better safe with me than to take careless decisions that will blow the money and put me in a very bad state, which I don't want. So guys, understand what you want and work on yourself. This forex business is so large, the industry is so large to accommodate all of us. So please, guys, be patient, know the kind of trader you are, understand the kind of trader you are, then get knowledge. Keep watching videos. Look for a good mentor that will mentor you. Get knowledge and then do what? Explore. Spend time with the market. You'll get experience. Experience that nobody will teach you. Experience that you get by yourself. And you will now be able to refine your trade to suit your personality. And then you are good to go. So thank you very much. I'm going to see you in the next video. I thank you for staying true to this video down to the end. This is Living on Forex. I got your back, and I'm going to see you in the next video. I'm signing out.